Unless you're $1 billion already, I don't think you have a place to invest in infrastructure.
Got it.
It's going to be a worse financial model unless we figure out another approach to kind of pricing for tokens. It's a bubbly-ish, but it's a way to get OpenAI to buy more Nvidia GPUs. It's a loan camouflaged as an investment.
Okay.
If you can't answer that, you cannot really nail your pricing.
So Nvidia announced a $100 billion investment in OpenAI. It's kind of controversial. A lot of accusations about circular economics. They're building a 10 gigawatt data center capable of powering 4 to 5 million GPUs to pursue what they call super intelligence. Most PE firms will read this headline and think it's about tech giants playing with monopoly money. But here's what they might be missing. This investment just validated that AI infrastructure is strategic, that there is supply constraints, it is expensive, and that this is what needs to happen to potentially move the industry forward. Today, we're exploring what this really means for healthcare PE portfolios and why your next investment decision just got more complicated, potentially. So first of all, what's your thoughts on the space right now with all this investment?
What we see, first of all, is, NVIDIA are being smart about it. This is a strategic investment. It's not a charity. So essentially, it's a loan. More or less, it's a loan for OpenAI to buy more NVIDIA GPUs. And so now the good news is OpenAI secures a whole bunch of hardware. The bad news for anyone else, now they have to wait. We know that GPU supply is constrained. The prices are going to increase. And therefore, your best bet is basically to secure such partnership, right? So OpenAI now is in good shape. Everybody else will struggle, but this is what it is. And I guess the other thing is, as we talk about super intelligence, and I know we'll get to that in a second, it's all about GPUs, right? So how much GPUs does the world have right now? What are we going to need? Like over time, what I see is more and more, demand for GPUs. And yes, there is the argument that, there will be more efficient models. Maybe there are going to be, SLM, small language models are a thing. Non-GPU running models are also a thing. However, I think the foundation where people are spending, where people are processing today is on OpenAI, on cloud, and therefore the GPU capacity matters a lot.
And what do these facilities look like? Is it literally just thousands and thousands of just GPUs stacked, just running?
Yes, racks upon racks upon racks of GPUs, powering all of the, you and I queries that we're doing every day.
So there's a lot of sort of AI tools out there, they run, maybe it's a subscription model, but what does the back end of that actually look like? Like, what is the infrastructure?
If you are a company that is if you're not OpenAI, or you're not Claude, your cost structure is basically you're paying a lot to Claude, to OpenAI, to the model providers. And it's a little bit different than, the older generation SaaS. In the older generation SaaS, you had a server running, whether people came or not, it's irrelevant. You kind of had like a fixed component, was fixed infrastructure. In the AI world order, it's actually consumption-based, right? So the more activity there's in the system, the more tokens we consume, the more we owe OpenAI. And therefore, the cost structure is also variable. You're susceptible to changes in pricing. And so I think it's going to be a very interesting and a very different landscape from what we've seen in let's call it SaaS 2.0. And I really don't know yet how this is going to play out. But I think it's going to be a worse financial model unless we figure out another approach to kind of pricing for tokens.
So what's your thoughts on the current token pricing in the market?
It is what it is, right? I think it's I believe it's artificially deflated or kept down. The reality is probably very different. And at some point, there will be implications to that. Somebody has to pay the price. And, would this be... I don't know what that part is going to look like, but essentially, we know that OpenAI is losing money on running GPUs and serving our queries. Yeah. So it's either that over time they're going to go increase the prices, and this is where a lot of SaaS, a lot of companies, a lot of AI companies that are building on these foundational models are going to be hurting. Margin is going to be hurting. Or you could bet also on an alternative future where maybe demand will increase, but it's not going to increase by the ratio we're thinking, just because there's going to be more opportunities for efficiencies that we haven't unlocked, algorithms we haven't invented that would allow us to maybe run more efficiently, whether it's through training that doesn't cost billions of dollars, or even like running our operations that are not.
Well, isn't energy technically the bottleneck other than GPUs?
It is. It is the bottleneck, right? GPU production is one issue, but energy demand for such kind of endeavor is huge, right? So you're talking about 10 gigawatts, right? Like 10 gigawatts of power. There's a lot of regions and cities in the US that they just don't have that supply. So,
well, then why doesn't Nvidia invest in energy instead of investing in OpenAI, for example?
Why would I would say why not? Like, I'm not sure if they've. I'm curious now. have they been investing in energy? But I would, right? And this is where Tesla comes into play.
Well, the argument is that
it's about all the solar energy.
It's a Ponzi, right? Like, that's kind of the argument, is that they're investing in each other, sort of helping each other out, kind of.
Well, if you're old enough to remember a time where Cisco was doing this with telcos. So Cisco essentially said, hey, but it was actually more like in the form of a pure, clear loan. So Cisco came to telcos and said, hey, you want to run our equipment? No problem. We'll front you the equipment. It's going to be a form of the loan. And that didn't play out well. That ended up in a telco bubble bursting, and it ended up badly. So are we in a similar bubble? Hell yeah. I think there's a whole bunch of signs of it. But, with every bubble, it doesn't mean that technology is not useful. It doesn't mean that technology is useless. It only means it's really human nature, right? Like, an invention is created, people find about it, people kind of, jump on the opportunity. Some of them will be right, most of them will be wrong, and then we go into the next big opportunity, and that's just how it plays.
I think even the Nvidia CEO said in like an internal memo to employees, like, every time it's earnings, the whole world is counting on us to basically keep this bubble alive, because if it bursts, it's just not going to be great.
Yeah, and it's not great for the technology.
Yeah.
Right, and I think there's a lot of promise, and some people might be tempted to, when the bubble bursts. It's not an if, it's a when. When the bubble bursts, the key is basically keeping everything that's useful alive, and then maybe getting rid of anything that is not as useful.
So then, what does this mean? This is like a healthcare podcast. Like, what does this mean for healthcare, for private equity, for everything, do you think?
What does it mean for private equity? I think the implications is how do we hedge our bets from such a price increase? How does it impact us, right? If I'm a private equity portfolio of maybe AI healthcare or even clinics, right? I'll be worried about this. I'll be thinking about, if I am using AI today, what happens if the price will increase, if the cost of LLM tokens increase? What would that look like? How much of an impact will it have on our practice? It's probably where I would understand. Or I would worry about that.
So it sounds like there actually is a lot of infrastructure risk with potentially ChatGPT or OpenAI having a monopoly on AI infrastructure.
It is, of course. Like, once you have 2 or 3 players dominate, it's a duopoly, triopoly. They'll price fix, but also there's a lot of healthy competition, right? Like, I think there's a lot of models that are coming out of China and coming out of France. So I think there's a healthy competition in that market. But of course, it's the 80-20. There's like 20% of the players. They'll dominate the entire market. What I would want to, like, if I'm in healthcare, the main things I'll be worried about are pretty much the same things that I was worried about in the previous generation, right? So vendor lock-in, like, how do I not get locked into only an OpenAI, right, or only an Anthropic. That's one thing I want to do. And so, with the products we build, we aim for the most part to kind of have the LLMs plug and play or a pluggable or replaceable. So I wouldn't build too much hinging on one particular model, just because I think it's even the fact that even, my best OpenAI model today will be terrible in 3 months because there's just going to be so many other better models on the market. So as long as you kind of build your technology with LLMs to be pluggable, you should be, at least you will avoid to a certain extent the vendor lock-in, and you'll avoid being stuck to one thing, one vendor, one pricing. So that's kind of one thing I would look at. And then where it's also going to get interesting, where we look at kind of edge versus cloud. Like, are we going to see initiatives where AI moves from, running a lot of AI running in, AWS data centers, Azure data centers for OpenAI. What the hell are they called? The Oracle Cloud. Will we see kind of on-prem? Would we see clinics running, like LLMs and local AI models? Hospitals.
I spoke to a clinic that's actually doing that, by the way. They're buying GPUs to build their own system. So it's definitely on the table.
Yeah, but that also comes with unique challenges. Like, I don't know if I would agree with that approach. I think it will make sense for certain larger organizations where the cost is going to be massive. There's the high level of security, but outside of that, even if you go, like, essentially it's going to be also a game where you're going to have to be buying and replacing GPUs every 2-3 years, because you're just going to have, like, your demand for GPUs is going to increase. 6 months from now, they're going to be way better GPUs than anything you have. And now the problem is who's going to subsidize that cost, right? So let's say I invested and I bought GPUs at a few $1,000. Today, I run on them for 2-3 years. Gonna have to sell them now. They're worth probably zero. Better models are there, but they're probably as expensive. So I think some economics that will need to be looked at to see if that's sustainable. And I think it depends. Again, it will depend on what kind of models we're talking about and what kind of infrastructure you're going to be providing.
So here's the big question then. Private, it is kind of about, there's a secret answer as well. So it's private equity, they're investing. Where should they invest in this industry? Is it in the energy infrastructure, in the GPUs? Should they be investing in OpenAI, into the models? Or
I would first,
it's a bubble.
I think,
Don't invest
first of all, you want to invest in the GPUs, right? I think energy investment, if you're a PE that's dabbling in tech, it's going to be, I think energy is a very different sector altogether. I would invest in really GPUs. I would invest in kind of maybe other better foundational models that are becoming more efficient, that are specific to healthcare. And like, I will still kind of invest in, healthcare AI, but I would want to understand, like, what is the risk? Like, if, say, OpenAI decides to raise pricing overnight by 2x, 3x, what would the unit economics look like for this company is what I would be worried about.
What's the diligence checklist now that 100 billion has been validated in AI infrastructure?
I think first we'll start with what we mentioned already. Like, what is my exposure to GPU costs, whether it's through my own usage or through, companies that I've invested in. Like, what is their exposure with kind of AI cost, infrastructure cost? You want to understand that because, if my profit margin was 30%, and all of a sudden compute costs jump by 30%, I'm going to start to lose money shortly. The second is basically you want to look at, is there any way I can secure pricing or secure future pricing for AI credits, right? There are instances where, infrastructure providers, AWS, Azure, etc., will allow you, for example, to lock a certain rate for a certain period of time. And so things like that will help you eliminate the uncertainty around rising computing costs. And then the third one I think we recommended is make sure your models are, pluggable, plug and play. Don't build too much and I know it's easier said than done, but you don't want to build too much tied to one particular LLM unless it's actually one that you're going to maintain, you're going to train, you're going to fine tune as time goes by. But like even some of the products that we built a year ago, by now you're like, oh my God, all the pain that I went through last year because the context window wasn't big enough, and now I can fit the whole thing. Oh my God, life is beautiful. And I think we're gonna start to see more and more of that as as we move forward. There's gonna be better models, bigger models. SLMs are gonna be a thing. Smaller models are gonna become a thing. On-prem, and I think we'll start to see also like open source hardware or open specs to allow me to run more on-prem things. I think it's going to be very interesting, very exciting, and yeah, we'll be building on that future.
Okay, let's do sort of rapid fire then.
Cool.
Cloud-based AI or edge deployment. What should clinics do? You already kind of mentioned this.
Cloud. Like the only for law, I would recommend on-prem for just very, very large institutions where you just can afford that, have the core competence to maintain that, to keep it updated, upgraded, secure, keep your GPUs running. I think otherwise on cloud is the way to go always.
What should AI healthcare vendors be nervous about in the next 2 years or 12 months?
What would happen if the bubble bursts?
I guess the bubble bursting means bigger prices for infrastructure.
Well, yes, but then how, am I gonna see demand? What's gonna happen? Like, how dependent am I on the bubble? How dependent am I on the hype? And this is a good opportunity for you to look at what you built and to say, have I built something valuable, or is it just I'm trying to capitalize on the hype? Right? There's a lot of companies that haven't built anything valuable, capitalizing on the hype, raising money, nothing to sell, nothing to show for. But there's a lot of companies that are building massive value. Right? I think, companies like Cursor, like AI coding, which is the space that is growing even harder right now. Like as we're speaking, Benny, I'm evaluating. So Google came up with something like Cursor called anti-gravity. There's another company that has a very interesting one called Kiro. Claude now has a desktop coding thing. OpenAI, ChatGPT has another coding thing with Codex. It's also like, if you look at this space with the AI, as the AI bubble bursts, some of them will die, but I'm willing to bet you that companies like Cursor will survive. Right? It doesn't necessarily have to be Cursor, but I think you want to look at who in these companies is the fastest to ship. And by the way, that is like, I'm a big fan of Cursor because I see them ship 3 to 4 times a day, and to ship at that level. You're probably using Cursor to build Cursor.
Who? I don't even know anything about Cursor. Do you know where they're based out of, or who are they?
No, but that's another episode.
Yeah, next episode could be Cursor episode.
Cool. Yeah, AI coding is a cool thing to talk about.
What's one metric PE firms should track across their portfolios immediately?
Token usage.
Do you think that these companies are tracking their token usage?
It's going to be difficult. It's going to be difficult to do, but it's going to be one metric that will. It's an interesting directional metric on how much data you're both consuming and producing over time.
Do you track your usage?
I'm actually building some of this, and we usually in all the products we have, we track, of course, because you need to know whether you're also making money or losing money, and how much a single transaction or interaction costs, right? Like how much does a phone call with the AI agent cost in tokens? If you can't answer that, you cannot really nail your pricing. And so, yeah, pretty much this is basically with Caesar. This is built into the foundational layer to count tokens on every action.
Is Nvidia investing $100 billion in OpenAI? Is that bubbly, or is that a legitimate investment?
It's a bubbly-ish, but it's a way to get it's a way to get OpenAI to buy more Nvidia GPUs. It's a loan. It's a loan camouflaged as an investment.
Okay, 50-50. If you had 50 million,
shady.
If you had 50 million to deploy in healthcare now, post kind of this sort of bubbly Nvidia investment, what would you do with it?
Anything that gets care closer to the home is what I would invest in.
And would you sort of invest in your own infrastructure, or would you kind of accept that it's going to probably stay cheap and it's worth just going with what's existing?
I'll say something controversial. Unless you're $1 billion already, I don't think you have a place to invest in infrastructure.
Got it.
Just makes no sense.
It's
Run on the cloud.
got it. And why is that?
Uh, well, first of all, do you have the if you're building on-prem, you need people. Now you have to manage people.
Mm.
You have to manage staff, teams, 24-hour security, SOC compliances. Also, like data center management is no easy. It's no easy game, and it's not something that, you know, unless you're a clinic and you want to have like 2 GPUs running. We're talking about, you know, massive infrastructure, massive people infrastructure, massive connectivity, power infra. It's not an easy thing. Unless you're, unless this is, 30 to 40% of your revenue and you're in the billions, I wouldn't worry about it. I would just run the cloud. The benefit is, again, no people, it's all kind of managed. You can scale it overnight. Like if you built a data center and you need to scale, this means more physical space, more purchasing of racks, more wiring of racks, things like that. How fast can I do it? Like how fast can I get a team on the ground now deploying your racks? Versus AWS, hey, start me 3 more servers, please. Send. Done.
Yeah.
Right? Like to me, if you are a software builder and you want to move with speed, I would do that. Especially if you don't, if you're starting out, you don't know how much you're gonna grow. Your growth is you're still growing. You really have no stable picture to you could probably plan and capacity plan, but if you're really growing like crazy, your plans are going to be broken very, very quickly, and so you'll have to yourself struggling. That's pretty much, if you look at SaaS 1.0 before the cloud infra existed, a lot of them went through a cycle where, oh shit, we're growing like crazy, servers are going down, we cannot add servers fast enough.
That's kind of my next thing I want to chat about. I remember an infrastructure crisis in a way. There was something called the adpocalypse, happened on YouTube, where YouTube overnight completely changed how it advertised. And a lot of channels no longer were eligible for advertising. Everything changed. People lost, their entire livelihoods to that. Like, how real is this AI apocalypse where pricing now, people realize how much constraints there is on infrastructure, and all of a sudden, boom, overnight, prices go up?
I think there will be a possibility of that, but I think it's probably gonna play out like my hunch. And again, well, time will tell. This is a prediction, so we'll see how well this ages. So November 30, 2025, we are making the prediction that there is already an AI bubble. The way I predict it's gonna burst is it's gonna be financial crash first. Ooh. It's a financial event, either private or public, that will drag down basically with it Nvidia, Google. Of course, they'll recover and everything, but I think this is where we now go into the skepticism phase, or the AI skepticism phase, where a lot of companies will go to die, and then after that we will, again, continue to build stronger. But I think is going to happen. It's going to happen soon. It's either going to be a breakthrough in the technology itself, that GPUs will become either irrelevant or you just don't need as much processing power. And something like this is likely to come from China. And the other event is more like a financial crisis where all of this, instruments changing hands, and the cows are going to come home on that, and that will basically start that.
So that's a pretty bold prediction, though, to predict a financial crisis. Like, how does that make you feel as someone who owns companies or is a CTO or multiple tech companies?
It will suck.
Yeah.
It will suck. It's I don't like to be pessimistic. In fact, I think you have to be optimistic by definition to start anything that's worth it. And so it's just, I think it's just looking at history and seeing how, there is a long-term debt cycle, there's a short-term debt cycle. This, happened in the history of humanity very regularly. And so one of them is likely to unfold. If you look at the S&P growth to date, it's all carried by AI. And so it's very easy to kind of make the hypothesis that one bump in that place is going to lead us to a world of pain where we have a crash or correction by 30% of the market. And, people are going to be less excited about AI.
Yeah, definitely. Okay, well, we can leave it at that. Unless you have anything else that you think is important to mention.
That was a cool episode.
Awesome.
I liked it.
Cheers.
Cheers, bro.